Welcome to our corporate accounting class. In today's session, we are going to discuss about the same bank accounts and the preparation of P&L account. This is slightly a typical problem, not that much complicated one. It's a small typical problem because we are having more informations than the previous two problems what we have discussed. See, in this, we are given with one P&L account, not a P&L. One trial balance is given, and also that trial balance is given with some provisions, and a difference in trial balance is also available. But for that difference in trial balance, we need not worry about at this stage because we are not going to prepare the balance sheet. We are going to prepare only the profitability statement, so that will not be affected here. Number one. So let us go to the informations. I'll tell the informations how that should be treated in P&L account. That is a profitability statement. How where it is, in which schedule it is reflected. Okay. So you please listen and watch out the informations carefully. That the first item is interest received. Here the term itself is given with the interest received. So it is supposed to be the income, that the interest received of 400 rupees. So if it is the income where we have to take, that is that 400 is interest received, is that amount earned. Okay, interest earned. Here it is given as that the interest amount is received of 400 is supposed to be the interest on the loans. Okay, so that should be taken in schedule number 13, that is income. Then another one is interest paid on deposits. This is also a self-explanatory one. Interest is paid. When the bank is paying the interest, it is a expense. When the bank is receiving the interest, it is supposed to be the income. Okay. See, in this case, interest paid on deposits 210 rupees. Where we have to take the interest paid is interest expended, that is schedule number 15. Then payment to employees. This is the amount paid. So we should take this in schedule number 16. Then commission received. This is commission earned or commission received. So any amount of commission received, discount received, brokerage received. Okay, these are all the incomes received. But these things should be taken separately. Why? Because one schedule deals with the interest income, whereas this one is clearly captioned as commission received. So we have to take it as other income in schedule number 14. Then another one is brokerage received. Brokerage given. Simply we are given with the brokerage. But how we are taking this as the income received? Because this is given as brokerage, amount is given in credit column. Okay. So that is why we are taking this is brokerage received. Amount is 150 rupees, should be in schedule number 14. Please watch this schedule number 14. We have to take this. Then another one, advertising. Advertising is what? Received or paid, that is not given. But normally, if the expense is given, is supposed to be the amount paid. Moreover, in this case, it is given as advertising in debit column. So we are taking this as operating expense, 15 rupees. Printing and stationery, 48 rupees. That is also a operating expense. And postage, telegram, telephone, that is also payment in operating expense. Then another one is interest on borrowings. What is that? Given in debit side, debit column. So interest on borrowing, and moreover this is amount given in debit column. So it is payment, and we have to take interest paid on borrowing 250 rupees in schedule number 15, interest expended. Then director fees, it's a payment expenses. Okay, director fees in operating expense. Then allowances, director fees and allowances, operating expense. Then rent, taxes, discount. These three items are expenses, operating expense only. Then we have to take these items as operating expense. Then another one is discount rupees 210 is received. What is that discount? It is discount receipt given in credit side. Okay, so discount receipt. So it's a income. Income in the sense in which schedule we have to take, because another schedule number 13 is pertains to only the interest income. Already I explained. Here schedule number 13 pertains to interest income. So we have to take this item in schedule number 14. Then um, what is that? Exchange commission. See, for example, to say when we are requesting the bank for issuing the demand draft, in that itself it is mentioned as exchange. So 100 rupees I am taking DD, some amount 7 rupee 50 paise as exchange commission, 10 rupee as exchange commission. So 107 110 I have to pay. 100 rupee is DD value, 10 rupee is the commission charges for the bank. Commission in the sense, for preparing the DD we have to bear some expense, that is the income for the bank. Okay, so that exchange amount of 180 rupee is income, other income. Locker rent. See, nowadays banks are providing the locker facility. We are using the locker facility. Also, we are required to pay the locker rent on periodical basis, maybe my monthly basis or quarterly or half yearly or annually, as per the conditions stipulated. So what the amount we are paying as locker rent is a income for the bank, and it is a other income, should be taken in schedule number 14 as other income. Then another one is a transfer fees. This is a new thing you have not used in the previous problem. What is that transfer fees? See, I am having a bank account in Mylapore branch. Also, I am having a bank account, another one bank account, or the same bank account, same bank. I am having an account in another one branch or different bank in Perangalattur. Now I want to transfer the balances from Mylapore to Perangalattur, or Perangalattur to Mylapore, or Perangalattur to in Jammu and Kashmir, any branch or any bank. If I want to transfer the fund, then fund transfer, that transfer or the transfer fees or the transfer charges may be applicable as per the conditions. If any of the charges made as a customer, we have to bear that charge. So that one is the income. It is a other income coming under schedule 14. So for various things, availing the facility from the bank, we have to bear the expenses. Okay, so that is transfer charges. Then next one, depreciation. Depreciation is expenses. It's a operating expense. We should take it in schedule number 16. See, because of a space constraint, I have not mentioned fully. Just I mentioned a depreciation on property. It is given as depreciation written off on bank property 30 rupees. Only the depreciation should be taken here. Okay, then another one, audit fees. It's a expense for doing the audit for the bank, statutory audit and internal audit, whatever the case is applicable, as per the conditions they have to bear the expenses if it is required. Then provisions 5 rupees. That provision should be taken in provisions and contingencies. Mind it carefully. Yesterday's class itself I told you, in yesterday's class also I explained two types of provisions we are having. One entry, provisions and contingencies, that should be in P&L account. Another one is that provision which is mentioned in other liabilities and provisions in schedule 5 of balance sheet, as liability side of the balance sheet. Okay, that is other liabilities and provisions. Here it is provisions and contingencies. Whereas in this question, we are given with the provisions in the problem itself. So no need to give the entry in asset side of the balance sheet. Moreover, we are not preparing that one for this problem is concerned. If it is given as adjustment, then we have to make two entries, minded, like the final accounts of a proprietary concern. In bank accounts also, we have to make for all the adjustments, it should be given with a two manifold effect. For as far as its provision is concerned, if it is given in adjustment, we should give one entry here, provisions and contingencies here, and another one entry should be in asset side of the, sorry, liability side of the balance sheet, and another one is miscellaneous expenses. It is supposed to be other expenses, and in the question we are given with the balance difference in trial balance of 500. That cannot be taken here, because you know why? Because we are not tallying anything in P&L account. This is only ascertaining the profit finally transferred to the balance sheet. That's why we are not accounting that difference of 500. Whereas in case of the balance sheet, we will have the effect of that. Okay, so please understand this clearly. Now we have taken all the items and appropriate schedules are prepared. Now you total the schedule. Interest earned, schedule number 13, is taken in that place. Another one, other income, that comes to 1100. That one is taken in the income side, other income, schedule 14. Then interest expended, that means what are all the expenses, interest expenses you made, that comes to 460 rupees, that is taken in schedule number 15, interest expended. Another one is that amount of operating expenses, various expenses incurred for that bank. Okay, that one is taken as 530, that comes to 535 rupees. That one is taken in expenditure operating expenses, schedule number 16. And for provisions, we have only one item, so separate schedule I have not prepared. Otherwise, we have to mention that schedule. Though we are not having the number for that schedule, but it should be shown separately, like 13, schedule 13, 14, 15, 16, like that. We have to show that the provisions and contingencies, one separate paragraph should be prepared, and what are all the provisions we are taking, what are all the contingent items we are taking, that amount should be mentioned in that schedule. Okay, so now we have taken all the things. Total income minus total expenses, expenditure, that comes to 500 rupees as the profit. And you know very well, statutory reserve of 25% should be created for all the banks, even though it is not mentioned in your text, in your problem. So that 25% is charged on the net profit of 500, that comes to 125. So total profit, no previous profit brought forward here. So total profit 500 minus statutory reserve of 125. So balance is 375 rupees. That amount should be taken to balance sheet in liability side, schedule number 2, reserves, schedule number 2B, surplus. In that column of schedule number 2B, surplus, there we should take this 375, and mind it, two items as far as this problem is concerned. Transfer to statutory reserve 25%, we have created 125, that should also goes to the balance sheet. Reserves 2A, reserves, there we have to take statutory reserve created. Then profit should be transferred there, surplus to B, surplus. Okay, so this is the clear cut example for your P&L account, preparation of profitability statement. Practice related type of problems.